Hey everyone, Nick here. Let's run through some tickers that you guys hit me with last week. I didn't get a lot of requests, so I added a couple of my own. I think people were disappointed how the week ended, so let's start there. How did the week end? Today is 10/22. We had a pretty bad week last week. There was nothing good about it. Usually I have a good spin on things in order to improve morale a little bit, but this one was bad all around, and let's talk about what to expect. So, what happened, I'll go through in a minute, but the theme here is warning, 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 warning. So, that's why we said keep those VIX calls if I have assets to protect, and use any rallies last week, any strength to fix things, not to add things. So, even though there are some stocks I could add or nibble on or sell some put spreads on or sell some puts to own shares, there are some bigger things going on in the market that we need to pay attention to. So we have outside influence that news, this kind of news, does change everything in the world. What news? War news. So the war in the Middle East is not local. Everybody's involved, I promise you. And it might be exported. Okay, so the struggle might get uglier, as ugly as it is already, and it might get exported. For that, we need to keep our safety harnesses on. All right, so let's talk charts. Forget the news. Now let's focus on the charts. Hopefully everyone is safe. So this is the S&P. And once we lost that orange line a couple weeks ago, we mentioned that this is the objective, 410 plus or minus $2 on the SPY. Unless we recapture the neckline. We did last week. In fact, we recaptured it by a mile several times, like fast, too fast. And then we fell the fastest since the financial crisis in March and last December. So we're coming up on the size of this drop and almost the same speed. Very bad last 3 days. I cannot spin it any way other than it was terrible price action for the bulls. Now, we're coming back to retest the bounce level. So I always say if we don't recapture the neckline, we come back and we lose the level from where we bounced, we're doomed to finish it. And in this case, they will probably overshoot and get to 405, 404, to that level here, which was the NVIDIA pop in May. I call it the NVIDIA pop, but it's, for reference points. So this breakdown had 25 points in it. That would be somewhere around here, 406. Okay. This breakdown, if they want to finish the second breakdown, which we haven't even started, has 38 points in it. That would be here, 382. And look at what that put us. Right exactly at March, the bottom in March. So today I'm opening the door for a disaster scenario that is not on the docket, but it could happen. I don't know what the politicians have in store for us. They can go completely stupid. So we are finishing this breakdown. We could start this breakdown. The first one, we've been in for a couple of weeks, has a target that's within 5%. This one has a target, if it starts, another 9% after. So, but this will happen like this. We will drop, pop, try to recapture. Same scenario, repeats. Okay, so now we're doing these things. So this week, the job of the bulls is to pop and not lose this line. I don't want them to go up. They just hold 420 convincingly. Okay, because losing this, yes, we finished that job, but we opened the door for a much bigger job. All right, so this is the warning. I scared everybody, right? So let's look at it from the NASDAQ's perspective. NASDAQ last week, look at where they closed. They haven't even started falling like the S&P. And their second scenario is so close that it's about the same. So the NASDAQ says, okay, we can drop to 333, which is the NVIDIA pop. So you can see how it's the same, only from different levels. So the NASDAQ, by the way, we have all kinds of earnings this week. All the mega caps are this week. So we have that to deal with, and that probably will make or break the market this week. I know that I have conflicting reports. I show Powell speaking somewhere on Thursday, but then I also have another report that shows the Fed meeting. There's a Fed meeting, a board meeting. It's not like the official Fed meeting, which is on 11/1, but I don't know. Is there an emergency meeting? I don't know. I'm just letting you know what I'm reading. And then I see also another headline that says the Fed is in hush period. They can't speak now until their meeting. So I definitely have conflicting reports. Meanwhile, there's all kinds of stuff going on. All right, so there's GDP numbers at the end of the week. But right now, we're in headline mode where everybody's scared about everything. So there's not one thing that is positive in the news. You cannot find one headline that doesn't spell problems. So the bears have everything they need in order to destroy us. Will they? Won't they? I don't know. So this is the disaster that has been going on for a long time. This is a basket of 2,000 stocks, the Russell 2000. It's ping-ponging here. If we already lost our supports last week, these two. Now, if we lose these two, technically it's another 10-20%. That's all I can tell you. So that means the S&P is going to that 380 something number. I don't think this one can drop another 15%. Let's split the difference between 10 and 20, and the S&P not fall 5 to 10% easy. So you better hope this happens to a degree. At least start it. So they don't have much room. One bad day and we're gone. So let's see here. They were down 1.2%, 1.3%. They can give away another 2% and that's it. So if we fall 2%, we are triggering this, but the process takes a couple of slices through it before it actually confirms itself. What am I saying? I'm saying stay protected. The you-know-what can hit the fan real quick. Okay, so just stay protected and stay realistic. All right, on to happier news. Let's just jump into some stocks that you guys asked for. These are alphabetical. We'll jump with Apple. Apple, I think, is the only mega cap, giga cap that doesn't report this week. Microsoft, Alphabet, Amazon, I think they all report this week. I'm scared about Apple. I went to the T-Mobile store yesterday, and they had Apple phones in stock. I thought they were sold out. I walked out with a phone. Not for me. I don't use Apple. But I wonder what's going on. He said it was the last one. It's like, okay, coincidental. Technically, it's hit target 1 and almost target 2 of a technical, that red W. So it is, it has support, it has resistance. There's nothing to do midterm between here the next few days. It'll just move with whatever whoever reports first. If Microsoft reports first, then it'll move with Microsoft. And I'm afraid as to what they're going to say. Apple doesn't have a sales problem. It never does, right? That's the strength of that brand. So what if they deliver a sales problem? Hopefully not. Anyway, boring phone or not, it doesn't matter as long as the sales come in. Everybody in the store had Apple 15s, so it must be better than the 14. That's all I'm saying. ABBV. So this guy is kind of like the small caps. You can't afford to make a lower low, and if you do, you probably go to 138. But you do have support. Same exact thing as the NASDAQ. Look at it, how it's hanging above these little sticks. You lose those sticks, you're coming down to here into better base. You don't need to, but it's there. So rallies will find resistance immediately. Support must hold. Otherwise, you have a trip lower. Airbnb. So all by itself looks like it's a descending wedge. So when a stock gets down like this, the range is this wide and it's getting tighter and tighter and tighter and tighter. It hits a support level it likes and then it bounces hard. Use those bounces to fix things if you're long already. If you want to get long here, it's not bad. Just leave room for error. Why? Because we don't know what the market's going to do. If the market's green this week, I bet you this guy will bounce to 124, 126. If the market's struggling, this one could be a 110. So if I'm long, I'm not adding. If I'm looking to go long, I will take a partial position. And this way, if it bounces, I'm already long. If it doesn't, then I have the opportunity to change my ownership and not be in trouble, all in trouble. I leave room to manage my risk. So that's about it. Earnings are in 10 days. Maybe they pre-announce, maybe they don't. ADM earnings are 2 days, so whatever I say doesn't really matter. From a technical, because it's a coin flip reaction to the earnings, but from a technical perspective, this has better support than normal. So it's fallen so much already into hard bounces that have been proven over time, looking back. It could bounce to 75. If it gets to 76, it's going to face a lot of resistance between that and 77. But once there, chop a couple of times, you might be able to get to 78. So first things first, hold the floor. Recurring theme, right? So this is a tiny company that you guys like. I get a lot of requests for it. I think I said wait for better entry points, because here's what happened. This is the SPY's problem. They lost support, triggered a negative scenario right there. They're there right now. That's the negative scenario. See, I said they would do a hump. It did a hump, but twice. And then that might be the end result. And they try to recover like the S&P did. They couldn't hold it. The S&P is right here in its journey. Remember? They lost the neckline. They tried to recover it last week. They did. And then now we're falling back into the place from where we bounced. If we lose that bounce, we're going to do what this one did. So this one is going to try to bounce again. And if it doesn't get above 36, it's going to bleed down to 28, I think. But my target has been met. So I don't need it. I don't need for it to go to 28. So same answer as the one before it. If I'm not long, I would nibble. Leave room to add. If I am long, I wouldn't add. Because if it bounces, I don't need to add. And if it falls further, I already shot my bullet. So I would wait. If I wanted to own shares, I would sell puts to own shares, but I don't think it's liquid on options. So somebody asked me about AI. What do I think of AI and Palantir? They're not even in the same book, those two. Okay, don't think that they're the same company. Look at this P&L. And once we get to Palantir, if it's in here, it's nowhere near this one. Please don't put those two in the same basket. They're both into artificial intelligence, but this one, the fact that you put that in your name tells me you're not that yet. So there's too much spending to the revenue growth. There is no revenue growth that I'm looking at here, maybe over year, but quarter over quarter is not that evident, and the spending is evident. So in my opinion, this guy is looking to sell his company. Just like the NASDAQ small caps. If AI loses 23.4, it might end up at 21, plus or minus 50 cents, I'm not sure. Plenty of resistance all around. However, this is a headline stock. It has had headlines of buyouts. Where did this come from? So check this out. All right, look at this. This we drew a while back. I didn't even remember I had it up there. So was that correct? That was correct. All right. This is a better starting point. If I don't own it and I want to own it for the future, then this is where I start. Leave room to more than double. Take a bite, 1/3. That's what I would do, because that leaves me room to manage. But that's same story. You lose the neckline. They lost the neckline twice. They tried to recover it twice and they failed, and then they finished the job. Look at that. Surgical with the arrow. Albemarle. So I said, what if it, what? Get out of here. Oh my gosh. What are you talking about? This was the forecast, folks. Look at this. And that was that was not my genius forecast. I said, what if this repeats itself? They repeated itself. So unfortunately. So now what do we do? We have to look too far left. Yes, these are hard bounces, but they're so old. And look at what's below. Very frothy. There's no volume here. See, there were no transactions. So the support is thin. What does this do? Development, manufacturing, chemical and consumer product electronics. Well, if we don't need consumer products because the government has broken the world, then this guy would be not doing well. I would not catch this falling knife yet. That's too soon, in my opinion. Even though, this could be the scenario. No joke. Why? They lost a neckline right there. You see it at 172. They tried to recover it, and they couldn't. So the next pop will be facing sellers. They're selling rallies inside of a descending channel. They could bleed all the way to 100, so be careful. I would not add. I wouldn't even start. If I have to, I would nibble just tiny bit, like 20% of my my intentions. Applied Materials, eek, teetering. Good morning, folks. Good morning. Teetering. So needs a bounce, just like the rest of everything. You see that hard bounces, at least they're somewhat recent and hard. So this one might end up in this area at some point. There's, the decision. It followed our arrows up. It hit the resistance zone. It couldn't get out of the resistance zone. If it bounces, it will find a lot of sellers into 139. I would not start longs here, to be honest. There's not a lot of volume here. If it loses last week's lows, it could easily slip to 124, which would be a much better start. 126 or lower would be much better start. Let them have it. Okay, so I have my box would be a better buy the dip zone for that. Applied materials. You can see it. Descending channel continues, right? Yep. So if I wanted to show you the visual, these lines don't have to not touch. It's just the behavior. Rally sold, rally sold, rally sold. Every rally was sold. This was a huge rally, sold in two pieces. So if the bulls want to win this one, they curl back up. Somehow, by some miracle, we'll take 111 out to get back up there. It will need a lot of work. What does it need? It needs the earnings soon to come out and say that, to help it. Otherwise, I think this one goes to 85. So in a series of events, like if they continue this descending channel, it'll end up somewhere at 88, 85. I don't need it to go there, but it's easier to go there than it is to go to 130. Let's put it this way. That's about the same distance down or up, right? If you're swing trading it to 130, I think you will get better entry points. How about that? Meanwhile, if the markets rally this week, this one will rally. And let's see what's at stake. This candle is at stake, so market 101. 101 was an extremely green candle, so there was a buyer there. Let's see if those buyers show up. If they're not there, you're going to look at 99 and a quarter. 101, 99 and a quarter. If you lose that, oh boy. So now we're going down to 98 through 95. Lose 95, 88's coming, maybe 85 in a series of events. So the stock went from here to here, right? This last rally. It gave back half, which is about half. I'm looking at it. That's normal. So far, it's normal. So if the markets cooperate, AMD could jump back up to 105, 108. Remember those lines? 104, 108? Those have been pivotal for quite a months. Extremely important. Okay, we'll go to Amazon. They report earnings, so I don't understand this. My phone is waking up when I say Amazon now. Did Amazon buy Google? Because my phone just woke up when I said Amazon. Okay. I think it wakes up to the word okay. All right. So we'll say all right. Amazon falling into a hard bounce level. So one would assume it could bounce. But if it loses this one, Amazon will be at 113. That is a real possibility for Amazon. Let's say we have a bad week and it slips straight there. And it has earnings in 4 days. So I think Microsoft and Google report on Tuesday. So this one will have a couple of days to chew their report. So maybe they pop, it pops with them, and then it curls, and then it drops to here. I'm not long Amazon. I do like the company, but I don't trust the government not to break the economy. So I trust the government is still trying to break the economy. That so-and-so said, yes, we might have to cause some economic blight. Those are not his words. I forgot his exact words, but he said, yeah, there will be economic carnage in order for us to control inflation. To what end? To what end? Inflation is not increasing. You're looking to get people fired and destroy businesses. And you know who he's hurting? The smaller businesses. Like these guys are still doing well. But this one does rely on consumer spending. So if I don't have a job, I'm not going to buy this mouse or this keyboard. Or I'm not going to order, a door online. So Amazon might deliver some bad news. I'm still looking. I don't trust the GDP numbers. Amazon will give me a gauge as to consumer spending in the U.S. Consumer spending is important. It's 2/3 of the economy. That's what the economists tell me. So This stock is at risk of getting into the 113. Manage your risk accordingly. If I'm long, I am definitely not adding. If I'm looking to get long, the only way you could convince me is to sell risk down below and leave a buffer for about 10, 15, 20%. Like if I wanted to own shares, I would sell them for next January way below current price. This way, the worst case scenario, I will be assigned shares at 15, 20% break even point below here. Then I'm okay. Otherwise, I'm not buying shares or calls here. If I am, it's tactical. So buy into this, close if it loses, so stop out, or just book 5 to 10%. Okay, this one, Arista Networks. Let's see what we got. We've traded this one successfully before. This is following the script. And this is behavior from before. We just copied and pasted. Why do I do that? Because look, Wall Street repeats itself. This was the copy. Look at how well it's playing out here. So if you move it like this, it's freaking perfect, right? So I'll leave it where it was, so I'm not cheating. Meanwhile, it is falling into an area of support. So if the market stabilizes, maybe it avoids this dip and it curls back up here. And then the opportunity would be to get above 200. That's pretty amazing that this thing is doing that during this period of time. That's pretty treacherous. It's pretty close to its recent highs. You can't say that about many things. Good P&L on the quarterly basis and the yearly basis. So that's a good company, it looks like on paper. It will fall with the market. At least it has support through 177. Okay, so I have an alert here, and I'm going to put an alert down here somewhere to be like, what is happening? Okay. It's on my to-do list. It's 8 days until earnings, though. Everything is no touch until the earnings. ARKF, you cannot pay me to trade this one. Financials and ARK, no. Look at the size of the head and shoulders here. Is there a bank going out of business tonight? I wonder if we're going to wake up to a bank failure or so. Look at the size of this head and shoulders. My gosh. What? It's like $4 or $5. So yeah, 1550 is the target of this head and shoulders. Now, they lost the neckline like the S&P did its. They tried to recover it once, twice, 3 times last week, and now they made a lower low almost every time. So they're going to continue like this, They bounce off of these guys, so they do have support at 17 through 17 and lower. But the objective is this giant head and shoulders. I'm going to tell you it's too big, so we will say 250, 1680. Like this and lower in this area would be interesting. 17, give or take 10 cents would be interesting. 17. So I'll put a line. I wouldn't short it to get there. Likely target of head and shoulders. Put that below. The head and shoulders right here. So if I wanted to show you a visual. It's not an exact neckline, but it's right there. You can't miss it. And I'm going to tell you my take on this. Will they match? They match. Wow, I love it. Okay, so how do you refute that? You jump up and beat 19.6 and 20. Asana, I escaped. I had a sold put and a put spread, and it expired. I could redo it. In fact, I'm going to put it back on my watch list. Now it's falling into support. The P&L is not awesome, but it's a decent little business, so we'll see. I could repeat it, and I think it'll hold support inside here. I think I will do that again this week. If the markets fall and this one drops, I would be interested again. So I'm going to put an alert here. It's random, not random. It's inside this base. If it comes back up to 19.5 and beats 20, it could get to 22. So if somebody's looking to invest in this one for the long term, nibble. All in? Absolutely not. Look at it. It's falling in a descending channel. ASML. Look at what it did. Perfect, right? Perfect. So now it's trying to trigger another head and shoulders that would finish this arrow. still vulnerable. That was my comments whenever I looked at it last. So it does have support scattered below, but it's going to need the market to help it out. Rallies into 600 and 605 are going to find sellers. It might end up at 545. I'm not adding. Boeing, I recommended people avoid it because I said that selling thing here, that is not human. Somebody with a lot of money made this happen. And I don't know them or what their intention and what's the need for them to do this. I'm telling you, something strange is going on in this world. However, technically, this one is falling into a big pivot zone right here. So point A to point B, they took half. They went back to point B. See that? And then they took this one. The target of this red W was averted with the stupid rally. So the target of red W was somewhere around here, 1 and 2 down here, but they didn't do it. They went to here, and another red W came out, and this is more than 113% of that, which is some sort of Fibonacci thing. So what am I saying? Technically, now it's coming into an area that is much stronger from a chart perspective. It's almost at that. I wouldn't touch it. Something is happening and it's above what we know. And so if you look from here to here, this is about half. If you force me to do anything with it 3 days before its earnings, I would sell a put or a put spread out in time that I don't have to worry about for a couple of months. And that's about it. If you want to buy call or shares, make it a small position because it is going into earnings. And what the heck is that? That is just phenomenal. Bank of America. So I hear bad things about Bank of America because of the assets it holds. Remember SVB, how it went out of business? You know why it went out of business? Because the Fed made it go out of business by ratcheting up the short-term rates too quickly. They happened to own a lot of short-term bonds. So then their assets went through the toilet. So they bought the assets when they were higher, and then the Fed went, okay, whoop, 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 ratcheted up the rates. So the assets, which pays that rate, price drops. That's an inverse relationship. It's always there. And when push comes to shove, they needed money to get people their money because there was a run on the bank. They couldn't leverage anything because the asset they owned were fire sailed. So is Bank of America stuck in the higher rates? Right. That's what I'm saying. They're going to have to cheat and bend the rules because all these assets, I heard, I didn't read or verify that Bank of America is sitting on a lot of long bonds. So longer term bonds, like the TLT would represent their rate. So if you want to see what happened to the TLT, that's what happened to the TLT. Imagine if you owned a house and this is the price of the house. So then your purchasing power goes, you say, oh, I need money to pay, get a pool done or something. Well, you can't refinance because what you own now is 40% cheaper than when you bought it. So what if Bank of America is holding a lot of 20 and 30-year bonds, and the 30-year bond US 30 yield also? So the yield spiked, so US 30 price is plummeting. So that's an asset, the bond that pays that yield. So what happened in the last 2 weeks? The long bond yields are catching up with the short term. Remember you heard the term inverted yield curve? Well, that's flattening because the long bonds are now following. Okay, back to Bank of America. The company's fine, but it can go out of business. Trust me, it can. I hope it doesn't because I do business with them, and so does, I think, most Americans. Anyway, I think the government will lie, cheat, and steal in order to make that not happen. They can't afford another Lehman moment with Bank of America. But anyway, that's why it's doing worse than the rest of the banks. Like if you look at other banks, they're not doing as bad. So having said that, it does have support, but I don't think it needs to hold the support. So if it holds support, that's awesome. It has support where it's at and lower, but if it loses 25.50, I think it goes to 23.50. So if I have stock, I'm not adding. If I'm looking for the long-term investment, I could, but I would not do a lot of banks. BMY, Bristol Myers, I don't trade it anymore, and this is just a horrendous chart. Every time it stabilizes, it sets a new low, and it's stabilizing here. So let's see if we can do a copy. So from here to here. Okay, so if we had copied this one, there was a rally. So if I put it on top of a rally, every rally is being sold into lower lows. Look at that one. Oh my gosh. I mean, this one is mirror image, like tick for tick. Look at it. Rally, dip, rally, dip, rally, dip, rally, dip. Mirror image. Okay, so what if these are them right here? I'm not saying that that's the case. There is a very sharp bounce off of 53.50. So anything below 54 should be defended harshly by the fans and backup support as well. I don't know the company. The P&L looks pretty boring, so I'm not sure why it's falling like it's going out of business. Maybe it makes I know why. So look into the drug mix it does. So maybe the popularity of the diet drugs and something else drugs that are saying basically that people are not going to be fat or have diabetes because of these other miracle drugs. I would bet against that thought. So BMY in the long term maybe would stabilize, it would make a good recovery, because I don't think that's going to happen. We're not going to be able to eliminate those ailments that these other drugs can fix. Anyway, you know what I'm saying, and I'm not a drug expert. So this one played out. Who is this? Blackstone. It rallied based on its inclusion into some index, so now it's giving it back, and it's back into that neckline. I think the rally will be met by sellers, so if you want to go long here and it bounces, I would suggest you scalp. This is decent support zone. But so I wouldn't buy puts. I wouldn't short it. I would enjoy the rally to get out. Who's car? Avis. Oh my God. I don't know how this company makes money. They are so unorganized. I rented once from them, never again. So it needs to hold where it's at. Otherwise, it opens the door for calamity. It does have backup support through 158, 159, and backup support and backup support. So it's hard to short. And it seems like it goes on long jags this way and that way. So let's say this did not happen. It's in a base. So if somebody is starting longs in here because they believe in the company, it's not so bad. Just make sure you're not all in and that it's tactical, because if you lose this recent support, you'll probably end up down here in spite of having buyers in the middle here. First Strut, Cyber Security ETF. I don't know what that is. Oh, it's an ETF. Okay. So make sure you don't you know when the components are reporting for this one. Okay. Having said that, this stock is falling into a hard bounce twice and a backup bounce. So what is this? Was there like a tick all the way down to here back then? There was a tick right here. What? Maybe they're going there. Interesting. I'm going to add this to my, maybe I'll buy a cheap put. Be careful. You do have support, but if you lose it, you will end up here. I guarantee it. If we lose support, we were going here. This was a fat finger of somebody, and they weren't going to fix it. They're going to cheat to fix it. So get ready for one of its components to poop itself. This is my guess. Okay, I don't have any proof. This could be an errant tick. I'm just telling you. But they do have support and backup support. I would be interested in it down here. If it pops this week, I would buy a put just as a lottery ticket. CLF. Wow, it's quite the P&L. Look at this. I doubt a company that goes from a net income of 300 million, loss of 100 million, 1 billion, and then 3 billion. 3 billion and then 1.3 billion. This is definitely something going on that is not normal, and I don't know how long this can continue. All right, so just doubt it just from that purpose. Having said that, huge buyers below, and they better show up. If you lose 13.8, you're probably going to go to 12.2, if not lower. Okay, so rallies will be met with sellers. I don't think it's going to be easy to get out of 15 anytime soon without a headline. Oh, wait, earnings in a day. Oh, okay. We'll see what happens on earnings. So the earnings, if they cross 16, you're gone. 17.5. If you lose this guy, you're gone maybe 12.50. 12? I don't know. CMA. Oh, another bank. Yeah, I wouldn't touch it. Why? It's losing. It just lost this. It has back up, but now the rally will be met with sellers. So I'm afraid that if it does rally, it's going to do one of these. So be careful. This was the target box, and it's in it from here. It does have scattered buyers below, but it is a bank, and it's not a massive bank. So who knows what's behind closed doors. Just be careful. If you're in it for the long term, I wouldn't add. If you're looking to get into it for the long term, I would take one bite of many. Coin, I wouldn't trade that one. Look at the P&L. I mean, what is happening here? What is happening? What is this? A complete mess. So I'm an investor, fundamental investor first, that uses charts to make decisions, and there's no way I can make a decision long on this one based on what I'm seeing. Lose 70 and you will be in the low 60s, guaranteed. So that's the comment. It is stuck. Higher lows, lower highs, move coming, direction unknown. If you lose 70, you're going to be in the low 60s, and earnings are in 16 days. If you take out 82, you're going to 96, 98. And I don't know which comes first. I can help you look at it before the earnings. We'll look at the options. Campbell's Soup. They're selling rallies, and it went on sale pretty quickly, pretty violently. Now it is in a base. Nope, it's losing the base. Scary looking thing now. The scary part is, so September, October of 2021, the market topped and it went on a 25, 28, 30% correction. This one started a rally then. Now it looks like it can start a rally. That scares me a little bit. So anyway, this was when the market started falling down. October, September of 2021. This is what the stock did. So let's see here. Let me go from here to here. Nope, that's not what I meant. Let me go from here to here. Okay, so what I did is I took the action before October of 2021 when this stock bottomed, and I placed it here. And if this happens, will the market repeat performance, a huge correction of 15 to 30%? I'm asking. Was it a coincidence? I don't know. We'll see. So if I'm long Campbell Soup, I'm not leaving it here if I waited all this long. In fact, I'm going to put it on my to-do list. I want to look at it tomorrow. It doesn't have any recent support. The support is there, but it's scattered and it's old. So be careful how you trade this one. Maybe shares, small bite. CRM, like the NASDAQ, has support, but if you lose support, you can end up at 180 in a series of little jagged moves. The company's fine. The environment is not fine, and it does have support, and it's pretty strong. They broke out of it back in May, bounced off of it, bouncing off of it. If they lose it, they will end up in this orange box towards the end of it. So I think they will fill this gap here in this area, which is the March, whatever pop was here. They will be inside that orange box. So they need to go above 212, because taking out 212 may give you 220. So then you'll be looking at a breakout versus a breakdown. Okay, it's not a dead deal. This is the more detailed look on it. So first step, 212 for the bulls. First order of business, don't lose recent support. CROX, I got away with one last week. I had a credit put spread. I closed it for slight gains. It was awful to own. Look how jagged this thing is, but it did exactly what I thought it would do. So what if it does it again, right? So I still want to be long this thing, because if it takes out 90, I think it goes to 100. But if it loses support, I think you can get started from 75. You see what I mean? So I want to put it on my to-do list just because it's interesting. It's already there. The P&L is pretty solid. Look at it. There's nothing bad about it. CrowdStrike. This is a part of the ETF, right? The cybersecurity. Isn't this cybersecurity? Yes. I told you that maybe one of them will stink up the joint. Maybe it's this one. This is too strong. It's falling back into a base. So support is scattered through 170. Up here, it's not an obvious entry point for me. I would let it hit the ground. CSIQ, I would avoid the whole sector because you saw what happened to ENPH, right? Yep, I closed ENPH on every pop. I got out, and then the last day it just collapsed. SEDG screwed everybody. And then now we have ENPH reporting soon, and we have for solar reporting soon. I would not want to be involved in this one. There's also rhetoric about solar panels going into trash bins that you cannot biodegrade, whatever. So the luster is coming off these panels. And this one technically has support, but it's pretty old and it's scattered through 14. So I'm not rushing. I need to see a reason to get long, and I don't see one right here. Delta Airlines, this is a better start than a short. So it has a bounce level. It has support from here, and then it has some at 29.8 and a lot at 28. So we have scattered support everywhere. It hit all of its targets. I think it may have a target down here. If it ever gets to this one, that's 1.13. Is that what this is? Let me see if I can do it right. Okay. Look at this. What? I'm going to put an alert here. 1.13 daily, just below. I don't know if it'll go there, but I will get long fiercely down there for a big bounce. Okay, it has a lot of support. There's no reason for it to go here. So it can bounce here. It's going to find sellers. It may drift lower, it bounce again, and never get here. So I don't want to scare people or tell people to go short, okay? But this is pretty rough. Now, if I'm long and I didn't get out, I want to see what happens here. And if it bounces, I get out. So I use any strength to get out because there are sellers everywhere. DDOG, cybersecurity. Yes, monitoring. I consider that cybersecurity. I bet you it's in that ETF. Again, it's losing a neckline. It has backup, but just like the IWM, rallies will be sold. If they don't get out of 90, they're in danger of getting to 76. That's probably the fairest statement. If they don't get out of 90 soon, 76. Support, resistance. They ping-ponged inside of it. Disney. Okay, so now it's getting more attractive for Disney because it's playing along the red W thing. So target 1 is being met. maybe a bounce and it curls back down. The target 2 is down here. I don't think it goes there. So into 81, 80, anything below 82 is interesting to me to be long for a bounce. How long it lasts, I don't know. 85, 86. So I can even say there's one of these here if you want to do an M. So they go like this. The red W is just, it's a harmonic pattern that says things have to retrace, and they have. Just like I'm doing an M, which is the opposite. Things have to retrace. So I'm interested in this candle right here. What is that thing? This box is interesting. Interesting area. That background is harsh. Okay. Dollar, who is, Digital Realty. Okay. You better not lose 115. You have support, solid support at 115. You lose 115, you're going for a ride, friend. You're going for a $12 to $18 ride. So 102, 104, this will be tested hard, if not the lower end of it. So 100 to 106 will be in play if you don't bounce. It's going to be in a series. Like it bounces, loses, bounces, loses, bounces, and it drifts lower. So maybe the visual on it is that it's going down in a descending channel. They're going to be selling rallies. Okay, so something like this from here to here. Like this. Something like that. Just be aware of it. It does have support, but if the support is lost, that's what it might do. This will trigger. Devon, look at that. So it's trying to do what the arrow said. Maybe it started it already. It did. So they didn't dip from here. They just went out and they dipped. So they're here in this process. They went out. They're coming back. Now, they left weak point. If they hold here, they can finish the arrow. But for me, I would have closed my longs. If I bought calls or long stock for this arrow, I would have closed them. That number, 51, is a huge area of resistance. Huge from a volume perspective. It is so much easier to fall than it is to rally, like by a lot. I wouldn't be surprised to see Devon at 47. Okay. 16 days until earnings. End phase. Whoo, dang. So I booked all my profits on end phase up here. That was a surprise hit from stupid SEDG. I wouldn't touch it, folks. I really wouldn't. And you know what? If you force me, I mean, the P&L is not bad. So clearly it has a business. But the way they climbed in October of 2020, we haven't erased that. The drunken stupor from the markets when they climbed above October's rally in 2020, we haven't even erased it. Look at the volume. There's not a lot of transactions here. It's easy to come down to 80 and 70. From a volume perspective. So if you force me, I would sell a put and it would have to be in the 70s for me to even consider it. And going into earnings in 4 days, no way. If anything, I would just buy, if I'm desperate, I would just throw money at a lottery call and just hope for the best. Or put, whichever your guess is. I don't know. I will look at the options the day before they report. And I may decide to say, you know what, I'll throw $200 on the call position that can turn into 1,000 or 2,000 or lose the 200. Like a lottery ticket. You buy 10 scratchers. Something like that. EQT, pretty good. What is this? Energy Minerals. Pretty good price action given the market. So you go above 45, you go to 51, maybe even higher, and you have support scattered. So you have an easier time to break out than break down. But if you lose 38, you're going to go to 34. But it's easier to get to 49.50 than it is to 34. But look at this income. What the? What? Earnings in 3 days. Yeah. What's going on here? Quarter over quarter. You go from 3 billion, almost 4 billion income to 850 million in 3 quarters. What? Yeah, I wouldn't touch this. I would buy a put, lottery put. This one, energy trap. Wow, a lot of energy, folks. What is going on? Okay, breaking out, couldn't break out, still trying to break out. I wouldn't go long here. That's not for me. I can't tell you why, but it's just the chart doesn't inspire confidence, even though it's doing well in a bad environment. So I'm going to tell you something. If there is war, oil is going to go triple digits by a mile. That's what happens on the when we have war, especially when the war is in the Middle East. The government will have to change its tone about drilling in the U.S. because there's no way I pay $6.50, sometimes $7 a gallon in California. What, am I going to pay $15 before the government decides to pump? So these guys might have a spike in them because of war headlines. But that aside, this ticker doesn't inspire me to go in long up here. Great move, though. If somebody is long, I don't blame them, but it's not for me starting longs here or adding. Etsy, we were in trouble with a credit put spread, rolled once, maybe twice sometimes. For some people, I should say. I used the strength to get out with a slight green, slight red, and if somebody waited longer than me, they got out really green. And I would re-engage once I know the market is stabilized a little bit. That's a closer look. It broke out, went to the target, and now it's coming back to establish footing. So if this week it holds 64, I'm comfortable that the sellers are done. But if it falls to 62, I would be interested in going long with a tight stop. However, I look here and it had 10 days on the clock before the earnings. So I think I will stay away from it and evaluate it as an earnings play with options information. Alphabet stock reports earnings, so really it doesn't matter what I tell you. The company's doing well last week. The company's doing well compared to the market. If I show you the daily chart or the weekly chart on Alphabet, that's an all-time high. It's like right there. So this one hasn't even started falling. If it wants to correct, the hit target 1, it's 14%. Target 2 is 23%. What is target? This red W in front of you. They're legit. You can make fun of them all you want. These are legit patterns. You see them, how well they come to fruition most times. So if we don't break out, we're going to go to target 1 and 2. 1 for sure, 2 maybe. How does it happen? We drop, we pop a little bit. We set a lower low, we pop a little bit. We just drift lower. It doesn't have to be a crash. But earnings are coming. Now, this company is a beast. I don't think it's going to suffer now. It's not like Amazon retail. We'll see. I mean, I advertise on Google, and I'm still spending money on Google and Facebook. So there's nothing wrong with it. But I don't like the uncertainty of the earnings. The reaction to the earnings is not about the quality of the report. It's about what's expected. Who is this? Ranger Equity Berry. I don't know what that is. Whatever that is, they're selling rallies. Rally sold, rally sold, rally sold, rally. So from here to here, oh my God, I do this 90% of the times. You think as much as I use this software, I would not do this. Rally sold, rally sold. Yeah, it's not for me up here. It's not a good starting point at the risk of missing it out. Hood, I own 100 shares. That was a mistake, and I keep it on the books to remind me that I do make mistakes. And it's falling into support. So if somebody is looking to start longs based on this chart, yes, as an investment, I can't tell you anything about it. Short term, they're selling rallies into a descending channel. So don't expect that to change. until they show you that it's changing. It does have support scattered. So yeah, I can put a box down here and say there's support zone, unfortunately. Okay, and it's all the way here. And this is a descending channel. They're selling rallies. Let's see where they want to stop. A lot of sellers at 960. So if it goes up to 960, 980, I think it'll be sold hard. This one needs a buyout headline. Johnson. Starting point, yes, with stops. This chart, ticker, yes. I don't know anything about their business. What is this? How can your net income be more than your revenues? Net income bigger than revenues. Hey, my salary was 100,000, yet I made 110,000 bottom line. Like what? I'm just saying. Be careful. I think that's the company that sold a bunch of stuff, right? So now it's a brand new company. They shed a lot of businesses. Just make sure you know the business. Rally sold. There might be a rally, and I would fade it. So the next rally, don't trust. It might do this. KO, they're selling consumer staples like they're going out of business. I don't know what's going on. One would think that the staples would die last, right? I think it's probably because they do pay dividends, and the dividends are definitely lower than the TLT, for example, the 20-year bond. So when you lend the government money, which is perceived as the risk-free asset, you can get 5%, and this one pays a lot less. I don't know how much less. Yeah, half, not even. Like, who would want to own it, right? So if it bounces, it would be exit into 58. It has support, but it's scattered. So I can't tell you what happens in 2 days when they report earnings. It's not for me. Lows, definitely not for me. Because I think finally the real estate market's going to get crushed. They keep saying, oh no, in a high interest rate, the real estate market flourishes because prices are going to shoot through the roof. Yes, but nobody's going to be able to buy anything or sell anything. So it's going to be a frozen market. So your house value will be great, but you can't do anything with it. You can't refinance to get cash out. And if you don't, then you can't spend money at Lowe's. You're not going to put pools, remodel, build a cabinet, do your kitchen. So that's my take. Technically, this is a starting point because that's where they bounced hard last time. So if you're looking to get long here, I don't blame you. But you should know that they're selling rallies on the shorter term. So you have to look left pretty far. So you have support scattered. Make sure that Home Depot doesn't report soon because they'll move hand in hand. I like Home Depot better than this one, by the way. Lowe's went out of business in my town, and it's a pretty affluent town, and there is a Home Depot. Why would Lowe's go out of business? That was very weird. Okay. Mara, I don't invest in these stocks. Technically, you have support scattered, lower highs, higher lows, move coming, direction unknown. I can tell you there's a lot of sellers at 950, 960. A lot if we get there. And there are buyers, but they're scattered from here to 5. So take your pick. This P&L says nothing. You have to study the company, study the objective of the company. How are they going to be worth more in the future? Is it only the price of Bitcoin or what? All right. So my crypto account has been healthy over the weekend. All kinds of crypto crap shot through the roof. And you have to know how this company makes money. Like, it's not a P&L thing. It's an asset management thing. So be careful. If you don't know crypto and you don't know how to manage assets, you might not know how to look at this company. Meta reports. So whatever I say doesn't really matter much. It's falling into a big support zone, and it's super wide. So between here and 288, 285, there are buyers scattered. Fight line, that was a pretty big fight. Big enough that I have a fight line name for it. I will catch the dip if it happens. It reports earnings in 3 days. Hey, and this is the end of video 1. We will stop recording.